Hi everyone, we are from Group 3. Before we begin, let me introduce our group members. I am Nur Izzati. My teammates are Nur Anissa, Nur Liliana, Putri Nur Ain Zurin, and Siti Nur Shafika. Now, moving on to the objective of this report. The main objective of this report is to analyze and compare the financial performance of Pokong Holding Berhad and Tommy Consolidated Berhad using financial ratio analysis. This report aims to evaluate each company's liquidity, profitability, and leverage position, as well as to assess their financial stability and risk level. Additionally, the report seeks to identify the strengths and weaknesses of both companies and to determine the most suitable investment choice based on the analysis. With that, we will now proceed with our presentation. For this slide, I would say about Pokong Holding Berhad. Pokong Holding Berhad is one of the leading jewellery retailers in Malaysia, operating a wide retail network nationwide. The company specializes in gold and premium jewellery product and is known for its strong brand reputation and product authenticity. Overall, Pokong represents a stable and well-established company in the Malaysian jewellery industry. For this slide, I would say about Tommy Consolidated Berhad. Tommy Consolidated Berhad is an established jewellery retail in Malaysia with a solid market presence. The company is involved in various stages of the jewellery value chain, including retailing, manufacturing, and wholesaling. This vertically integrated business model allow Tommy to manage costs effectively and respond quickly to changes in consumer preference. Tommy also offers jewellery product for different customer segments, making it a growth-oriented company in the Malaysian jewellery industry. So I will pass to the next presenter.
This slide shows a comparison of the liquidity ratio and leverage ratio within Pokong and also Tommy for 2023 and 2024. In terms of liquidity ratio and Pokong, Pokong record a higher current ratio and increase from 4.21 to 4.16, indicating a very good ability to meet short-term liability. Tommy also increased slightly but still below Pokong. In addition, Pokong net working capital is much higher than Tommy, indicating a stronger liquidity position. For quick ratio, both companies are at a low level, but Tommy still record a better ratio despite a slight increase in 2024. Next, in terms of leverage ratio, Pokong show a decrease in debt to asset and debt to equity ratio, indicating a lower financial risk. On the other hand, Tommy record an increase in both ratio, indicating a higher reliance on debt. In conclusion, Pokong is a more stable and secure financial position, while Tommy has a higher level of leverage and greater financial risk. This slide shows a comparison of efficiency ratio and profitability ratio between Pokong and Tommy for 2023 and 2024. For efficiency ratio, Pokong showed an increase in fixed asset turnover from 7.29 to 8.3 times, indicating more efficient use of fixed assets. Tommy recorded a slight decrease from 15.47 to 14.93 times, but still at a higher level than Pokong. For inventory turnover, both companies record an almost similar and stable ratio, with Pokong slightly higher than Tommy in 2024. In terms of average collection period, Pokong showed a very short and improved collection period, while Tommy had a much longer collection period, although slightly decreased. Next, for profitability ratio, both companies show an improvement in performance. Pokong record higher ROA, ROE, and also net profit margin in 2024 compared to 2023, indicating a variation in generating profit. Tommy also shown improvement, but overall its profit margin is still lower than Pokong. In conclusion, Pokong is more efficient in terms of operational management and stronger in terms of profitability, while Tommy still relies on high asset inflation but with lower profit margin. Overall, Pokong showed a stronger and more stable financial position than Tommy for 2023 and 2024. In conclusion, Pohkong is a more balanced position in terms of finance, risk, and profit, while Tome has high asset efficiency risk but has more challenges, leverage, and cash management.
Thank you to Nuruliana. I am Nur Anissa binti Abdul Kadir. So let's move on to year-to-year analysis for Statement of Financial Position and Statement of Financial Performance for Pohkong and Tome. In 2024, Pohkong's total asset increased by 9.18%, mainly due to higher inventories. At the same time, total liabilities fell by 7.52%, while equity increased by 14.42%. This shows effective deleveraging and a stronger, lower-risk capital structure. Overall position is Pohkong was having a stronger balance sheet, lower financial risk, and it is financially stable. Revenue grew by 11.65%, but net profit increased much faster at 49.06%. This gives a good overall performance because Pohkong is having strong cost control, improved efficiency, and a solid recovery in profitability. Next, for Tome's total assets, it increased by 14.43%, driven by a 19.38% increase in non-current assets and higher inventories. Total liabilities increased by 16.21%, while equity grew by 13.01%, reflecting a leverage-supported expansion strategy in their overall position for 2024. Next, Tome revenue rebounded strongly by 15.21%, reversing a decline in 2023. So net profit increased by 25.48%, showing a clear turnaround and improved operational performance. This shows a strong profitability momentum and business back in robust growth phase. Comparatively, Pohkong reduced liabilities by 7.52%, while Tome increased liabilities by 16.21% to fund expansion. Both companies strengthened equity, with Pohkong increased until 14.42% and Tome increased by 13.01%. Comparatively, Pohkong recorded stronger profit growth, with net profit increased by 49.06% and operating profit increased 41.74%. Meanwhile, Tome achieved a strong revenue rebound of 15.21%, but profit growth at 25.48%, which lower than Pohkong. So, Pohkong has a higher profit growth with stronger financial discipline, while Tome has a stronger revenue rebound but with higher reliance on liabilities. In conclusion, Pohkong shows stronger financial discipline, higher profit growth, and lower risk. Tome offers higher growth potential through expansion but with greater reliance on debt. Overall, Pohkong is the stronger and more financially stable performer in 2024. To make a decision for conservative and low-risk investors, Pohkong is more suitable. For growth-oriented investors, Tome may be more attractive. Overall, Pohkong is the stronger performer in 2024, achieving higher profitability, growth while reducing debt and maintaining a more resilient financial position. I think that's all from me. Thank you.
Assalamualaikum, I'm Siti Nur Syafiqah and I will present the what if analysis conduct on Tome Consolidate Berhad. Using financial data for the year end 31 July 2024, what if analysis is decision-making technique used to evaluate how change in key variable affect financial performance. In this study, three Excel tools were applied: data table, scenario manager, and gossip. First, the data table analysis examined the relationship between sales and revenue, interest, operating costs, and net profit. The analysis considered worst case, best case, and best case scenario range from negative 10% to plus 10%, and the results show that sales and revenue have a positive impact on net profit, meaning higher sales generally lead to higher profits. However, profit growth is not perfectly proportional because variable costs increase with sales. This highlights the importance of cost control alongside revenue growth.
Assalamualaikum, I'm Zurin and I will explain about what-if analysis for Pokong Holdings Berhad. Firstly, based on data table analysis, Pokong net profit is strongly affected by sales and revenue. When sales increase, the net profit also increases. This shows that sales growth is the main factor that improves the company's performance. However, the increase in profit is not always smooth because when sales go up, operating costs such as expenses also going up. This higher cost reduce part of the profit. This means Pokong cannot depend only on the increasing sales but must also control its costs properly. Next, the analysis show that increase in operating profit will lead to increase in net profit, even if interest costs change. This show that good daily operation and efficiency are very important for the company. On the other hand, when operating expenses increase, net profit falls quickly. This clearly shows that poor cost control can seriously affect Pokong profitability.
Next, I will discuss the scenario manager analysis. 3 scenarios were developed. For the worst case scenario, with the lower sales or higher operating costs, show reduced profitability and potential financial strain. This reflects the downside risk faced if the market condition weak or management become inefficient. The best case scenario represents normal business condition and is often used as a benchmark for planning purpose. The best case scenario assumes higher sales and better cost control, resulting in the highest profitability. So this indicates strong market condition and effective operational performance. Overall, the scenario analysis showed that Tome financial performance is highly sensitive to change in sales and cost assumptions, emphasize the importance of risk management and contingency planning.
Moving on to scenario summary analysis. 3 scenarios were analyzed, which are the worst case, best case, and best case. In the worst case scenario, sales decrease while costs remain high, causing a big drop in net profit. This shows that Pokong is sensitive to weak market conditions, especially when customers spend less on jewelry. Next, the best case scenario represents normal business conditions and it's used as a reference for planning. Last but not least, in the best case scenario, sales increase and costs are well controlled, leading to much higher profit. This shows that Pokong has strong profit potential when market conditions are good.
Lastly, I will explain the goal C analysis. Goal C was used to determine the minimum sales required to achieve a target operating profit of 120,000 ringgit. The results show that Tome needs a substantial increase in sales to achieve this target profit. Indicates the company profit structure is highly dependent on revenue growth. If the required sales level is too high, management may need to consider alternative strategies such as cost reduction or operational efficiency improvement. So in conclusion, what-if analysis provides valuable insight for Tome strategic planning, budgeting and decision making, especially in managing revenue growth and cost control. That's all from me. Thank you.
Lastly, the goal 6 analysis showed that Pokong needs a very high level of sales to achieve its target operating profit. This means the company depends heavily on sales volume. If the required sales level is difficult to reach, management may need to focus more on reducing costs and improving efficiency instead of relying only on sales growth. In conclusion, Pokong can earn high profit while sales are strong, but it also faces higher risk when sales decline. Therefore, strong sales strategies and strict cost control are very important to ensure stable performance.
For this session, we will conclude the financial performance analysis of Pokong Holding Berhad and Tome Consolidated Berhad. Starting with Pokong Holding Berhad, the analysis shows that the company demonstrates strong overall financial performance and stability. Pokong record an excellent liquidity position supported by a high current ratio and strong net working capital, which is it indicates its ability to meet short-term obligation comfortably. In addition, Pokong maintains a conservative capital structure with low level of debt and increasing equity base, reflecting prudent financial management. In terms of profitability, Pokong experienced strong growth in 2024, as seen in the improvement of key ratios such as return on asset, return on equity, and net profit margin. So these improvements such as effective cost control and high operational efficiency. Overall, Pokong carries lower financial risk and shows better long-term sustainability compared to its competitors. Moving on to Tomei Consolidated Berhad, the company shows solid financial recovery, particularly through strong revenue growth and asset expansion. Tomei also maintains a healthy liquidity position and performs better than Pokong in terms of quick ratio, indicating stronger immediate liquidity. However, Tomei relies more heavily on debt financing, which result in higher financial risk. Although Tomei profitability improved in 2024, the growth remain moderate compared to Pokong. Nevertheless, Tomei vertically integrated business model provide greater professional flexibility and support its expansion strategy. As a result, Tomei can be considered as a growth-oriented company, although it carries high risk. In conclusion, both companies recover well in 2024 after weaker performance in 2023, but they adopt different strategic focus. Pokong emphasizes efficiency, profitability, and debt reduction, while Tomei focus on expansion, revenue growth, and asset scaling. Pokong demonstrate stronger liquidity, lower financial risk, and better overall profitability performance, where Tomei offer higher growth potential but with increased financial risk. Therefore, from an investment perspective, Pokong Holding Berhad is preferred investment choice, especially for conservative and long-term investors who prioritize financial stability and sustainable return. For this slide, I will present several recommendations for both Pokong Holding Berhad and Tomei Consolidated Berhad based on financial analysis. Starting with Pokong Holding Berhad, it is recommended that the company improve its quick ratio by strengthening cash flow management. Although Pokong has strong liquidity overall, increasing readily available liquid asset will further enhance its short-term financial flexibility. In addition, Pokong should continue maintaining its conservative debt policy as low leverage has proven effective in preserving financial stability and reducing risk. Furthermore, Pokong is encouraged to expand its digital platform and online sales channel to diversify revenue stream and capture a wider customer base, especially for younger consumers. Lastly, the company should continue practicing strict cost control measures to protect profit margin, particularly during periods of economic uncertainty and fluctuating gold price. Moving on to Tomei Consolidated Berhad, it is recommended that the company gradually reduce its reliance on debt financing in order to lower financial risk and improve its capital structure. Improving inventory turnover and receivable collection is also important to enhance cash flow efficiency and overall profitability. In addition, Tomei should balance its expansion strategy with stronger cash flow management to ensure sustainable growth without excessive financial pressure. Lastly, enhancing risk management strategy against gold price volatility will help stabilize earnings and reduce exposure to market fluctuation. Overall, by implementing this recommendation, both companies can strengthen their financial performance and remain competitive in the Malaysian jewellery retail industry. So, this is from me. Thank you.